Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zalewski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CVRLT.com. Recorded weekly in greater downtown Miami, this 1-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the social media accounts of Peter Zalewski and Jenny Huertas.
Happy Monday, Miami. This is Peter Zalewski. I'm a condo consultant. I'm also the founder of the Miami Condo Investing Club. This is Miami Condo Mondays. It is a 1-hour live podcast that I do with my partner, Jenny Huertas, who's a broker owner at CVR Realty. Check out her website, cvrrealty.com. We're going to be focusing on 3 issues this week. So turn off that soft rock or tune out your boss and tune into our conversation today. We're going to talk about all things South Florida condos. We're going to talk about a potential interest rate cut that could be coming on Wednesday by the Federal Reserve's Federal Open Market Committee. We are also going to talk about, for the first time in 5 months, we've actually seen an increase in the number of condo listings in the Tri-County, South Florida area. The media now is starting to get on the fact that we've had this big D-listing is what they're calling it in terms of active listings. Well, we're here to tell you, and they'll probably tell you a month from now, that all of a sudden listings are going back up. So we will touch on that. But the primary focus of what our Miami Condo Mondays podcast is going to be all about today, we are going to get into the best and the worst vintage condo markets. Remember, vintage condos are those condos that are at least 30 years old or older. Why are we focused on 30 years or older? Well, much of the legislation that followed after the Surfside condo collapse, in which nearly 100 people died, and a $1 billion settlement was paid out to the families of the victims of that tower, that Champlain Tower South, that collapsed back in June of 2021. Many of the changes to legislation is really impacting these vintage condos. So we're going to tell you which markets are the best and which markets are the worst. All that being said, let me go ahead and bring in my co-host, Jenny Huertas from CVR Realty. What's going on, Jenny? Happy Monday.
Happy Monday, Peter. I'm so happy that it's finally stopped raining. At least for a couple of days, we had not much rain. So it's really good to see the change in the weather because the rain was getting annoying.
Jenny, I will say I came out of the house late last week. And there's always that first day when you get a glimpse of the change in seasons. So when you're going into summer, one day you walk out and you go, oh, summer's here. Well, I stepped out of the house last week. I'm kind of like the, that groundhog. When the groundhog sees its shadow, that means that, whatever's happening with the season. I came out of the house and it felt like winter to me. So whatever that's worth, we're right in the peak of hurricane season, but it seems as if things are sort of cooling down. Not to say we can't get some outlier storm rolling in off the continent of Africa heading towards our way, but it definitely felt like the weather had changed in hurricane season. Hopefully it's going to be in our rearview mirror real soon.
I hope so.
So Jenny, what I want to talk about Miami Condo Mondays this week, and we've been doing this since May. This is an initiative we started in the summer. I always like to say you build during the summer and then you hold on during the winter because that's when everybody's in town. What we focused on with the launch of this podcast, again, every Monday from 4 to 5 o'clock or so, running a little bit late today. I had a little bit of an issue, so I apologize, everybody. For some reason, you can't stick around till the end of our show. Just rest assured, we're going to have a copy of the podcast up at miamicondo.club. You can also find it on other social media websites. So what we're talking about, though, is we're talking about a big important meeting that's coming up on tomorrow as well as Wednesday of the Federal Reserve's Federal Open Market Committee. This is basically the fat cats that get together and they decide, should the Federal Reserve, which is the central bank of the United States, should they be raising interest rates or should they be cutting interest rates? And remember, interest rates, when they go up, housing activity slows. When interest rates go down, housing activity goes up. So this is really something of great interest to people in the South Florida condo market, which is basically overwhelmed with supply. Nobody is trading for a number of different reasons. So people are really actively kind of watching this decision of Federal Reserve Chairman Jerome Powell. He's under increasing pressure from President Donald Trump, who is a developer and still a developer at heart. And I would tell you he's running the Oval Office for these meetings, kind of like a developer runs a pre-sale office, but that's kind of a different story. But, Donald Trump's been asking for these interest rate cuts for quite some time. Right now, in theory, the mortgage rates on a condo or a house, they're coming in, they were coming in about a 7% range. Typically, whatever the 10-year treasury is, which is basically an instrument in which the public can invest, whatever that is, you add 3 points to it. That's what gives you the mortgage rate. And then the Federal Reserve, they have a rate that they charge the banks for an overnight interest rate. That's called the federal funds rate. So they tend to work in unison. Sometimes they're out of whack. Like right now, they're out of whack. The 10-year treasury is lower than what you're going to find on the Federal Reserve federal funds rate. But generally speaking, when Powell lowers rates, housing goes up. When Powell raises rates, housing goes down. That's kind of what we're up against, Jenny. So beginning tomorrow, this Federal Open Market Committee is going to get together in Washington. They're going to review all the data. Let's hope the data is good, because remember, you had the firing of the director of the Bureau of Labor Statistics, because that person in August came out with numbers in the morning about job growth. President Trump did not like the 8:30 a.m. release, so he fired her. He blew her out by the afternoon, by 3 o'clock or so. So, hopefully the Federal Reserve still has some good information. They tend to run their own information, but, nowadays you don't necessarily know what you can believe and what you can't believe, and why is it there? When is it going to be there? So all that's going to begin tomorrow, the evaluation, and then on Wednesday, a decision will be announced, I think, typically at 2 o'clock on the final day of the Federal Open Market Committee is when they make the announcement. And then Jerome Powell, the chairman, he'll then come out and he'll read a statement, and then he will follow suit and take questions. Now, I will tell you, Jenny, we've been talking about this since August. Why we've been talking about this since August? Because every year in August, the Federal Reserve Bank of Kansas City, understand the way the Federal Reserve works. There's a central bank, which is the headquarters. That's in D.C. And then they break up the country into regional banks. So the bank in Kansas City, which oversees all the banks in its territory out west, what they do is they always host an event at Jackson Hole, which is a highfalutin area in Wyoming with the Grand Tetons in the back. All the bankers get together. They talk about what's going on. They share stories. But also, too, Jerome Powell or whoever is the chairman of the Federal Reserve. And Jerome Powell's term comes up in May of next year, and President Trump's trying to fire him in advance because he hasn't cut rates like President Trump wanted. Why does he want rates to go up? Because he wants to ultimately be able to see the housing market take off. So this is kind of what we've been up against. This has been sort of one of the issues. But back in August, Jerome Powell made the statement, made the comment that we need to pivot. So Federal Reserve has two focuses. One focus is jobs. The other focus is inflation. The goal of inflation is 2% or lower. We all know what happened during the pandemic. We went over 9%. Then we were on our way back. In February, we came down to 2.3%. We were on the verge of taking care of that priority, which is inflation. And now, what do we find is going on? We've decided, based on a slowing job market, some of it has to do with tariffs, some of it has to do with the fact that people, they're not sure if they're going to have their jobs. Maybe it's AI. Maybe it's because people aren't buying as much because of the tariffs. Remember, tariffs were an average below 4%. And then we had this pivot on Liberation Day, which is April the 2nd. Now they're on average 17% or greater, according to Morgan Stanley. In some countries like Brazil, who's a big supplier of beef to the United States, as well as the filler for coffee, 50% tariffs. So this is kind of what we're up against. So job market's going sideways. Inflation is actually rising. So now the Federal Reserve, who has two responsibilities, inflation at 2% or less, and jobs, and both of them seem to be going to shit right now. So the Federal Reserve and Jerome Powell, they're going to be making a decision. What do we do? Some people are saying we could see a 25 basis point rate cut. What does that mean? That means a quarter of a percentage point. 100 basis points equals 1 percentage point. So they were talking about 25 basis points, but because last week an inflation report came out, showed that inflation's going up. They're now talking about 50 to 75 basis points. What would that mean? That means, if you reflect that back in your mortgage, that means your mortgage, which right now is in the 7 handle, at least it was last week before we saw a pullback. Now it very quickly could be in the 6 handle. And some people say, we could go as low as 5% on a mortgage. And if mortgage rates are 5%, which is what many have called for, we should see a bump in housing. So that's what we're up against this week. Again, meeting starts tomorrow. The announcement will come at 2 o'clock Eastern time on Wednesday. And ultimately, Jerome Powell will start taking questions about 3 o'clock or so. So, Jenny, that's a long way to say we are potentially at a moment when the whole focus, this pivot could occur, and this could be good for housing, assuming you have a job.
Exactly. Assuming you have a job and the prices continue going down.
And the prices continue going, well, and that will be the push-pull. That's what we're going to be up against. So a lot of people are looking at it with great interest. If you look at what's going on in the stock market, a lot of the home builders, companies like Lennar, which is based out of Miami, their stocks are going up because all the investors are getting in there thinking these guys are going to be humming. They're going to be running because interest rates come down. That's assuming you got a job. And if you don't have a job, then how likely are you to buy? And those investors who are sitting on the sidelines, many of which, Jenny, you're working with, they're looking for deals. They're not simply looking to get in the market. They want a low interest rate and they want a cheap price, far below what we saw in terms of the run up during the pandemic, which we ran some stats and we found from pandemic highs to as of the middle of this year, there was about a 69% appreciation over the course of 4 to 5 years. So rapid appreciation. What should appreciation be? I don't know, 3 to 5%, maybe 10%. But you go on a run where you get 69% appreciation in 5 years. That is a hell of a clip. And some wonder, is everything still too high? Even with low interest rates, is it still too high? Or do you need to get a pullback in pricing and Jerome Powell to cut rates and the market to pull down interest rates in order to kind of get this this sluggish, struggling South Florida condo market humming again? Well, any thoughts about that, Jenny?
Yes. Actually, our weather reflects the market. You know, the summer was so sluggish and rainy and nothing happening, stall and hot. I mean, hot in the bad way. And finally, we'll see some activity, some things that are going to really make a difference. So in order for this market to really take off, in my opinion, it has to be both. It has to be lower prices combined with lower interest rate. Why? Because the maintenance are not going to go down.
And Jenny, give everybody a point of reference. What, mainland in Miami, $1 a square foot per month on maintenance, and then on the Barrier Island, Miami Beach, Bell Harbor, place like that, what, at least $1.50 a square foot per month, correct?
Yes. Actually, I was so surprised. I was talking to a friend that has a property like, you know, somewhere in Lauderhill that is, you know, a very, very low price property as an investment. And she was telling me that the maintenance is $500 when it was $200, like, you know, 5 years ago. So when you put that together, then when she wants to resell for that particular property in the price range, then it becomes an issue, a higher maintenance fee for a small place, meaning maintenance cases is affecting all of us, all the markets, independent of what the price tag is.
Now, Jenny, you're saying Lauderhill. Do you happen to know what kind of square footage this condo is? Because
yeah, it's
when you're in Lauderhill, you're in reclaimed Everglades. This is nowhere near the coast.
No, but it's very
west.
tiny.
Yeah.
No, it is tiny. It's like 600 feet, 500 feet. It's just small.
So she's close
so
to
meaning
$1.
That is
she's close to $1 a foot.
Yes.
Wow. Okay, so if we just run it out, let's say it's 600 square feet, she's dropping $500 a month on maintenance. Any ballpark, Jenny, as to what she thinks the place is worth? Did she happen to mention that?
Probably 150,000.
About $150,000. Okay, so if somebody were to come in and buy it, say they put down 20% or so. Oh, no, let's make it simple. They're going to buy it for $150,000. They put down $50,000. They got $100,000 to finance. Now, what they'd be looking at 5%, if it's 7% interest rate today, but likely to go down as far as low as 5%, that would be a tremendous savings each and every month, especially if she wasn't paying any money towards principal, if she was just paying interest. Now, on that $150,000 condo, she's looking at 2% property tax. So you run the numbers there. That's $3,000. $3,000 divided by 12 is going to give you what is that? $250 a month or so.
Yeah.
Now, so you got $250 there. You got $500 a month on the maintenance fee. Now, if she's got a special assessment, How many stories is the building? Is it,
No, it's small. It doesn't have a special assessments yet.
it doesn't have a special assessment yet. Okay. So what we have found is 3 stories or lower, special assessment ballpark, $25,000 per unit, especially as they get older. If they were between 4 and 14, we're looking at $50,000 to $75,000 per unit. And then if it's over 14 stories, you're looking at $100,000 a door. Typically, an association will give you 12 months to pay it. Some associations will take out a loan, and then you got to pay. You got to pay back that loan. The interest rate is coming in at effectively the same rate as your mortgage. So right there, if an association's taking on a loan, they might actually be able to take advantage if, in fact, Jerome Powell, the chairman of the Federal Reserve, if he moves forward and if the board moves forward and cuts rates tomorrow, again, it's supposed to be at least 25 basis points, but could be as much as 75 basis points. That's 3/4 of a percentage point that they could cut effectively tomorrow. And if that were the case, there might be tremendous savings. But keep in mind, typically the Federal Reserve, when they cut interest rates, they're doing it because there's an issue. They're not doing it because they feel like it. They're doing it because they're trying to juice the economy. And what they want to do is they want to try to get the job market going again. The problem is you got AI wiping out jobs. You also have a situation where people aren't buying as much because they're fearful of having their jobs. And thus far, many companies like Walmart, like General Motors, they've announced in their quarterly reports that they're not passing on the tariff thus far to the individual consumer. They've been eating that because they're afraid if they hit the market too fast, everything is going to stop. It's going to come to a standstill, and they still need to keep things going. Much like when you go into a restaurant that has a happy hour that's struggling, that restaurant might take a loss because they want to keep the lights on. They want to keep everybody employed. They want to kind of keep it going. But at some point, if you're losing money, is it really a business or is it really a hobby? And that's kind of what we're up against. So that's why tomorrow is going to be important. And your friend's point, is a good one. If we said $250 a month on property taxes, we threw another 500 in on maintenance. She's looking at $750 a month. She's got $100,000 in financing. I don't know. What is she looking at monthly in terms of payment?
Let's say if $700, if you were to buy a place, your mortgage would be $700, right? So $700 plus $250.
Yep.
$750 plus $500, $1,250. How much those places rent for? $1,000.
Wow.
More or less.
So if they
you're upside down.
So
if somebody buys today, she had no problem because she bought it cash.
Okay.
But if a new buyer comes, there is a challenge to meet the numbers
because
in that scenario.
Because a new buyer would have financing. Therefore, they have to cover that and yet still try to get some sort of return if they're lucky enough.
Mm-hmm. Yeah.
So, it is critical to kind of get the housing market going, especially if things are slowing down, simply because they cost so much more because of tariffs. Remember, tariffs before Liberation Day, April 2nd, 4%. Since then, average of 17%, according to Morgan Stanley. But again, it could go as high as 50%. So this is something I'd encourage everybody to watch. Come Wednesday, we will have a major announcement, and we are probably getting a shift, and we're probably going towards lower interest rates. But then the question you need to ask is, why is the Fed cutting rates? And the reason is the job market, one of its 2 responsibilities of the central bank, is apparently in trouble. So this is something to keep an eye on. So we'll see if the Federal Reserve can kind of work its magic and kind of make things happen. So, Jenny, the other thing I want to talk about before we get into these vintage condos and which are the best markets and which are the worst market based on our Miami Condo Cliff Index, which we started on January 1st. The other thing I want to talk about is we're actually seeing an increase in listings. Now, for 5 consecutive months for the South Florida area, this is going to be Miami-Dade, Broward, Palm Beach County, taken as a whole, 5 consecutive months, every single Tuesday when we pull our numbers. And what are we pulling? We're pulling active listings. We're pulling pending sales. Every single Tuesday when we pull the numbers, we've seen the number of listings going down and going down and going down and going down. Why were they going down? Well, one reason they were going down is nobody was simply buying and the listing was expiring and the realtor was like, hey, Mr. or Mrs. Seller, we need to renew. And the seller is saying, I don't want to do it. Or the other alternative is some of these people had their listings up and all the offers were coming in way, 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 way too low for either what the seller thought it was worth or what the seller originally paid for it. So we saw these listings go from what would have been close to 30,000 to suddenly they dropped below 25,800. And what we saw this Tuesday when we were pulling the numbers for the Miami Condo Cliff Index, we actually saw that there was an increase. There was a net increase of, are you ready? 70. Now, 70 is not a big number. You got 25,800 condos on the market in